In 2025, global trade is at a pivotal point, experiencing significant growth amid geopolitical tensions. Traditional trade patterns are shifting, creating new opportunities in digital markets and sustainable technologies. This year highlights both the resilience and vulnerabilities of our interconnected economy, paving the way for transformative changes. In 2025, global trade is experiencing significant expansion amidst rising geopolitical tensions. Traditional trade patterns are shifting, creating opportunities in digital markets and sustainable technologies. This year highlights the resilience and vulnerabilities of our interconnected economy, paving the way for transformative changes. In the first half of 2025, global trade expanded by $300 billion, with a 1.5% rise in the first quarter and a 2% acceleration in the second quarter. Despite a modest 1% volume growth, trade values surged due to price increases, highlighting inflationary pressures in global markets. Developed economies are driving the trade surge. The United States saw a 14% import increase, fueled by consumer demand recovery and infrastructure investments. The European Union experienced a 6% export growth, bolstered by manufacturing and technology exports. In contrast, developing countries faced a 2% import decline due to currency pressures and limited purchasing power. Notably, Africa's exports grew by 5%, with intra-regional trade surging 16%. The United States trade deficit expanded, with China as the primary contributor. China and the European Union both saw increasing trade surpluses, underscoring ongoing global trade imbalances. Vietnam also played a role in this dynamic, further complicating the trade landscape. In 2025, the United States trade deficit expanded, with China as the primary contributor. Both China and the European Union experienced increased trade surpluses, underscoring persistent global trade imbalances. These shifts highlight the challenges in achieving equitable trade relations and the need for strategic policy adjustments to address these disparities effectively. Geopolitical tensions and policy shifts are reshaping global trade dynamics. Nations are grappling with regulatory changes, impacting economic stability. Strategic alliances and diplomatic negotiations are crucial to mitigate risks. Understanding these headwinds is vital for businesses to adapt and thrive in this volatile environment. Rising protectionism is reshaping global trade dynamics. Trump's re-election hints at 10 to 20% tariffs on imports, with a proposed 60% tariff on Chinese goods, escalating tensions. New tariffs on steel and aluminum could fragment trade further, prompting retaliatory measures. These developments threaten to disrupt global supply chains and increase geopolitical risks. The World Trade Organization forecasts a 0.2% decline in merchandise trade volume by 2025, with a worst-case scenario of 1.5% if tariff escalation persists. Services trade growth is revised down to 4.0%, facing challenges from digital restrictions and regulatory barriers, threatening global commerce recovery amid policy uncertainty and reciprocal tariffs. Least developed countries face severe risks from the global trade slowdown, with limited diversification and high export dependence. Export-dependent economies are squeezed by tariff wars and policy volatility, necessitating rapid adaptation of trade strategies. Small island states are disproportionately affected by rising shipping costs and reduced market access. Targeted support and alternative trade pathways are crucial for maintaining economic stability. Protectionism disrupts global trade stability by imposing tariffs and trade barriers, leading to increased costs and reduced market access. This creates uncertainty, affecting supply chains and international cooperation. Economies must navigate these challenges by diversifying trade partners and adopting flexible policies to sustain growth and competitiveness in a volatile environment. Digital markets are reshaping international commerce, with product trends driving significant changes. The rise of e-commerce platforms and digital payment systems has streamlined global transactions. Innovations in artificial intelligence and machine learning are enhancing customer experiences, while sustainability trends push companies towards eco-friendly products. These shifts are crucial for understanding the evolving landscape of global trade. Digital giants have significantly increased their market share, with the top 5 multinationals controlling 48% of global digital sales by 2025, up from 21% in 2017. Regulatory interventions have risen sharply, from 14 to 153 cases worldwide. Microsoft, Google, and OpenAI are at the forefront of artificial intelligence and cloud dominance, though enforcement varies by region. Consumer electronics, with a $2.7 trillion trade value, see China, South Korea, and Vietnam as leading exporters. Agricultural commodities reach $2.9 trillion, dominated by the United States of America, Brazil, and Argentina. Automobiles and parts, valued at $1.6 trillion, are led by Germany, Japan, and South Korea. Pharmaceuticals and biotech sectors rapidly grow, with Germany, United States of America, and Switzerland as key players. Electric vehicles are experiencing exponential growth, fueled by climate policies and consumer adoption. Renewable energy technologies, including solar panels and wind turbines, are surging. Plant-based foods, offering alternative proteins, are gaining momentum. These sectors are the fastest growing in international trade, driven by sustainability mandates and evolving consumer preferences, alongside information and communication technology products and health and wellness goods. Innovation is reshaping global trade, opening new frontiers. Breakthroughs in technology and sustainable practices are creating novel markets and opportunities. From artificial intelligence-driven logistics to blockchain and supply chains, these advancements enhance efficiency and transparency. As businesses adapt, they must leverage these innovations to remain competitive and capitalize on emerging trade dynamics. Strategic opportunities in global commerce are pivotal for future growth. Identifying emerging markets and leveraging technological advancements can enhance trade efficiency. Businesses must adapt to shifting consumer demands and regulatory landscapes to remain competitive. Emphasizing sustainable practices and digital transformation will be crucial in navigating the evolving global trade environment. Global trade shows resilience amid uncertainty. Freight indices have rebounded, indicating improved logistics. Regional integration is strengthening as countries form reliable trade blocs. Services continue to drive growth, overcoming manufacturing challenges. New partnerships and trade routes are emerging, effectively bypassing traditional bottlenecks, showcasing adaptability in the face of global trade headwinds. Policy clarity and cooperation are vital. UNCTAD recommends coordinated competition law enforcement and strategic digital economy investments. The World Trade Organization emphasizes multilateral dialogue to mitigate tariff risks and trade fragmentation. The urgency for coordinated action is increasing as unilateral measures threaten the multilateral system. Non-aligned countries are strategically positioned to reshape global trade networks. They must navigate United States-China tensions while maintaining relationships, favoring safer geographies in Asia and Latin America. Expanding partnerships beyond traditional powers is crucial, yet they face complex risks and pressures from economic blocs, requiring a delicate balancing act. The World Trade Organization projects a 4% growth in commercial trade for 2025 to 2026, contingent on effective management of policy risks. Digital and green technologies present new growth avenues beyond traditional manufacturing. Strategic investments in infrastructure, skills, and startups are crucial for sustaining competitiveness in this evolving landscape. Global trade in 2025 stands at a pivotal juncture, balancing challenges and opportunities. Policy risks, if managed, could lead to a 4% growth in commercial trade. Digital and green technologies offer new growth avenues, while strategic investments in infrastructure, skills, and startups are crucial for maintaining competitiveness in this evolving landscape. Global trade shows mixed growth signals, with expansion tempered by geopolitical and policy challenges. The United States and European Union lead growth, yet global trade imbalances widen. Digital transformation reshapes trade dynamics through market concentration and innovation. Urgent coordinated policy action is crucial to maintain growth and ensure inclusive prosperity. Embrace digital innovation and sustainability in trade strategies to drive growth. Strengthen multilateral partnerships to reduce tensions and ensure stable trading environments. Invest in resilient supply chains and emerging market capabilities for sustainable growth. Today's choices will shape whether global trade fosters shared prosperity or deepens divisions.